Hi everyone, Doug Eckelberger and Habit Collective bringing you the latest Stephen Thomas report. Go ahead and click on the link down below. You will get a copy of his report and the article, and then the charts and graphs that go along with it. Tells you all you need to know about what's happening in Orange County real estate today. So his article is actually on pricing, and it's a good topic right now, especially as we're heading into a slower time, what's typically a slower time, and then when we get into the springtime. Pricing a home, maybe overpricing a home, as he points out, can be pretty detrimental to someone's bottom line. If they shoot for a high price and hold out too long and then they do price reductions, then they're not really met with the activity that they expect. One thing on pricing a home, you need to pay attention to comps, but you also need to know where the demand is and what time of year you're pricing that home. If I'm pricing a home in spring and let's say I'm pushing the price a little bit, but demand is rising up towards me, I know it's going to get busier, then I can be slightly wrong on the price or maybe push price a little bit more and demand will catch up with me. If I'm pricing a home where the demand is falling away from us, typically that is where we see, let's say August or September, where demand starts to really soften and softens throughout the end of the year. I have to be much more precise on my pricing. That being said, this year we had demand basically in about June start to flatline through the whole year, ticked up a little bit, fall down a little bit. It's been bumping up and down through the whole year. So what happened is those that were optimistic, let's say back in May, June, July on pricing, where demand wasn't meeting their price point, it just fell flat. And then the price reductions that we had fell flat as well. Showings were slow. So it's two different factors that you always need to look at, not only just the comps and what the home is worth, but where is the demand and where is the buyer pool going to be sitting at with the market. Over summer, we saw the buyer pool probably sitting somewhere between 5 to 10% below where active listings were. That's why we saw slow activity, long days on market. We saw a lot of price reductions. Then eventually the properties would sell for maybe a lot less than they would have if they went on at the right price that was pairing it along with demand at that time. It was just hard to figure out demand over the summer just because of the uncertainty in the marketplace. But I think right now we're in a pretty solid market where we can now predict the demand. Interest rates have come down. That's helped us a lot. And as we head into spring or the first half of the year, we're looking at a market that's probably going to be pretty robust. If you have any questions regarding pricing your home, or if you're purchasing a home or where the right value is to make that purchase, give us a call. My name's Doug Eckelberger. I'm with Habit Collective. Have a great day.